Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Wednesday, the 2nd of July 2025. So as usual, let's have a quick look at the disclaimer first before we kickstart today's Daily Dose of Market Insights. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yesterday as well as in today's early Asia session in terms of the news flow, relevant economic data release, and their impact on the intraday cross asset classes that we cover on a daily basis, ranging from the major US dollar pair, the major stock indices, and as well as the two key commodities, gold XAU/USD, and followed by the West Texas crude oil. All right, so let us kickstart with the performance of the US stock market first over here. So I will say that the performance of the US stock market is rather mixed yesterday. Why do I say that? We do have two major US stock indices that are down yesterday, which is the SPX 500 that is down by negative 0.11%, pardon me. The NASDAQ 100, which is much more heavily weighted towards the mega cap technology stocks, which is slightly above 50% of the weightage on the NASDAQ 100 is being skewed towards these mega cap technology stocks with the likes of NVIDIA, Meta, Apple, and as well as Alphabet and Amazon. So they are the worst underperformer. So I'll share with you why NASDAQ was the worst underperformer yesterday, down by negative 0.89%. And the top performer was the Dow Jones Industrial Average, being supported by the heavy weightage towards more defensive sectors, stocks like healthcare is up by 0.91%, and the Russell 2000 yesterday closed at the almost unchanged level. All right, so yes, what we could see over at the heat map over here. Okay, so this is the S&P intraday heat map. So very clearly, we see a slew of red in the technology sector over here, where NVIDIA is down by negative 3%, Meta is down by negative 2.6%, and Microsoft is down by negative 1.10%. And thanks to Apple, which has managed to inch up higher by positive 1.29%, and Amazon positive 0.5%, that managed to actually reduce the damage that's being done on the S&P 500 and the NASDAQ 100. So one of the reasons why the NASDAQ 100 and the S&P underperformed was due to the passage of this beautiful tax bill done by the Trump flagship One Big Beautiful Tax Bill, which is at a 3.3 trillion tax cut. Okay, that this tax bill is worth 3.3 trillion, so it's actually a massive amount of tax cuts that's being planned out. So that bill is being kind of a narrowly passed by the Senate, okay, by 51 to 50 votes over here. So right now this bill will actually go back to the House to actually revote, because there's some provisions that's being done on this Senate approval. And one of the little provision that's being done was due to the what I call that this AI related monitoring by the states of America. So because of this provision that causes the sell off in AI related mega cap technology stocks yesterday, where I share with you like the likes of Meta, the likes of Microsoft, and NVIDIA. Yeah, this is the one. Senate during the final negotiation over here voted to kill a controversial effort to prevent US states from regulating artificial intelligence. All right, so basically he killed the effort to prevent US states from regulating artificial intelligence. So the senator voted that the various US states in US are allowed to have the power individually to regulate artificial intelligence. So that actually make a loss that actually potential cramp down business opportunity, which indirectly created a negative feedback loop, or I would say a loss to major technology firms like Microsoft Core and Meta platforms, and eventually NVIDIA. Why? Because Microsoft and Meta platforms, in order to drive their artificial AI product related service, required NVIDIA specialized chips to run this AI venture or AI business segment. So that actually also have a negative feedback loop into NVIDIA stocks as well. So because of this, Senator in the US decided to kill off this controversial effort in part of this Trump flagship 3.3 trillion of tax cuts plan that created a negative feedback loop into the Nasdaq 100. So now the big question you guys will be asking is the Nasdaq 100 at the start of a multi-week corrective decline? So later I will share with you when I cover the short-term intraday technical outlook. All right, and also because of this passage of this 3.3 trillion of flagship Trump tax cut bill, potentially based on the CBO estimate. So CBO is actually a partisan congressional budget office in the US. So they will actually do estimates of based on current fiscal policy, how much will the US budget deficit widen or narrow. So we know that US has been owning lots of money to the rest of the world, and given the fact that with the passage of this 3.3 trillion Senate version of the bill that's being passed through, that could potentially add on to nearly 3.3 trillion of budgets over the next decade. All right, so it will actually widen, pardon me, it will actually widen the US budget deficit by additional 3.3 trillion over the next 10 years, and that is slightly higher above the 2.8 trillion projected earlier by the CBOE, with the earlier version that is being passed by the House in the month of June. Right, so there's actually two versions. The House passed the first version, and the Senate yesterday passed another version, which tend to lead to a widened budget deficit because these two versions is different. So today the bill will actually come back down to the House again for voting. All right, so very likely Trump try to push this flagship tax cut bill to be fully approved by him before the 4th of July, that means before this Friday. So time is ticking out. So very likely, I think the House will be being pressured to actually approve this tax cut bill. All right. So with that widening of that budget deficit to much more than higher than the earlier estimate of 2.8 trillion to 3.3 trillion, that could potentially see a higher, we call it yield on longer term US Treasury, because of potentially there could be a credit rating agency in like Fitch itself starts to actually write negative reports on US sovereign bond, and because of this negativity, we see gold price rises yesterday. Because don't forget over here, one of the reason why gold price rises is because as a hedge against this massive tax bill that could widen US budget deficit, that could potentially see credit rating of US Treasury debt potentially get put on a radar for further downgrades, and that saw gold prices rises due to the safe haven demand. So that I mentioned yesterday, gold price, yes, it indeed rose, but we do keep a close eyes watch on a resistance level, which is the 20-day moving average around that 3,350 level, which we've been highlighting that there could be a potential pause if the gold price can't surpass above 3,350 level. So let me share with you what do I mean by this. So for those who followed my daily dose on a daily basis, you should be able to understand what I'm talking about. All right, so this is the gold price. So yesterday we have a short-term intraday bullish bias on gold. So what we could see that gold price rallied as expected. All right, this is the rally over here. Yesterday I did mention, so it hit the resistance level at around this 3,346, 3,350, then can't rally further, and during the intraday session it intend to do a U-turn, and where a U-turn exactly at the 20-day moving average. So as we are speaking right now, gold is trading at 3,370, negative 0.03%. So the big question over here is that will gold price plummet all the way down to break below this Monday low, which is at the 3,244, where we flip back to a bullish bias. I will cover much more in greater detail when I cover the second segment of today's daily dose, which is the intraday technical outlook on gold XAU/USD. All right. And also talking about the US dollar itself over here. So the US dollar yesterday traded kind of sideways. Okay, let me share with you guys over here. So this is the US dollar 5-day rolling performance. So after plummeting US, but at the before the start of the US session, and throughout yesterday Asia session over here, US dollar actually plummeted, and upon hitting yesterday's European session, that means i.e. at around the middle part of the European session, which is the first half of the European session, pardon me, at 5:50 p.m. Singapore time, you see a stabilization in the dollar. All right, so the dollar just traded sideways, but didn't actually rally much itself. So if you look at this is the 5-day rolling performance. If you look at the 1-day rolling performance, the much more shorter term one, the dollar continues its decline. All right, over here. So now the dollar is the weakest against the sterling dollar against the Swiss franc, as they are now trading down by negative 0.02%. And even though the dollar yen rallied earlier from 5:50 p.m. yesterday all the way up to the middle part of yesterday US session, we start to see the dollar also losing steam against the yen itself, which is only down. The dollar yen is only up marginally by positive 0.10%. So let me explain to you guys what causes the dollar to go sideways yesterday. Was because starting from Monday until today will be the last day in I think it's somewhere around in Italy or Italy. There's this global developed central banks meeting hosted by the ECB. It's a forum. It's a forum where they actually discuss what will be the challenge for their respective monetary policy. And they also hinted some we call it views when they actually participate in the panel discussion. So yesterday there's this panel discussion between ECB Lagarde, the big boss himself, Fed Chair Powell, Bank of England Governor Bentley, and as well as Bank of Japan Governor Uda. So Bank of Japan Uda yesterday during this we call it panel discussion in this ECB Global Bank forum, he actually ramped up the message saying that he going to be data dependent, going to wait for additional data to make adjustment on the next monetary policy decision, which market is anticipating at least 125 basis point cut somewhere around in Q4 this year before 2025 ends. So as well as signaling that he's not in rush to rise borrowing costs. So that causes the dollar yen to actually spike up a while then before trading back down during today's Asia session. As from a technical perspective, the downtrend of that dollar yen still remains intact after that medium term bearish breakdown of that 143.90 level. So I'll share you very interestingly, technically the rally actually stopped at the 143.90 level, which is the breakdown level that has taken shape yesterday. And also over to Bank of England, Governor Uda. So Bank of England Governor Bentley, pardon me, because due to a bit of tongue twisting, he did mention that low UK debt making high rates less effective. That means, i.e., do not forget, Bank of England is also a bit less dovish as compared to the cousin ECB. ECB has been cutting rates for 8 times since its interest rate cut cycle. Bank of England is only done by I think 2 times as only, and they decide to actually keep mentioning that, stating that due to elevated inflation. And right now, Bank of England, Bentley, he actually mentioned during that panel discussion in the ECB forum yesterday, stating that low UK debt at this moment in time making high rates less effective. That means, i.e., he indirectly hinting that if inflation data continues to inch downwards, he will be much more favoring of lowering rates in the UK, given the fact that in the last few months we see a very soft labor market in United Kingdom. All right, so that very interestingly could see the euro dollar strengthening against the sterling dollar going forward. All right, so the big boss himself, Fed Chair Powell, he also continues to message his rather data-driven, stubborn message, where pretty much angered US President Trump, stating that he will still be in favor to actually wait and see for the effects of the tariff, which are expected to show up in inflation data in the coming months, and will make decision meeting by meeting basis. And he slammed back President Trump, stating that the U.S. central bank will probably would cut rates further this year. That means they are able, if they wanted to cut, they're able to cut rates further this year, provided that absent of US President Trump's expanded use of the tariffs. All right. So going forward, it seems to me that Fed Chair Powell will be still stubbornly ignoring Trump's pressure to actually cut rates as soon as possible, and even by more than two interest rate cut where market has started to price in this year, most likely, which is this based on the dot plot itself. All right, so let's look at the based on all this messaging done by the key global developed nation bankers on their view of current inflation trend and their view on their respective monetary policy. Has it really changed the dial on the US Federal Reserve monetary policy expectation as being portrayed by the Fed Funds futures market trader, data being compiled by the CME Fed Watch 2? So after that slew of panel discussion yesterday, market is still looking at a very high chance that the next upcoming meeting in July, 30th of July to be precise, by the Federal Reserve FOMC, they are looking at a high odds of 78.3% that the Fed will remain stand pat to maintain the Fed funds rate at 4.25% to 4.5%. All right, over here. And if we were to go down the calendar by looking at this aggregated tab, market is still viewing a higher chance of a 2 interest rate cut. The next one to come in the 17th of September to FOMC meeting, where a 25 basis point cut is expected, a high odds of it at 90% chance to bring it down lower to 4% to 4.25%. Then thereafter, they will bring forward another cut from December to October now, 29th of October, also a relatively high chance at 79%. The Fed will bring it down lower another 25 basis point to 3.75% to 4%. So there's these two high odds of chance that two interest rate cut by the Fed of 25 basis point each likely to be occurring on the 17th of September FOMC meeting, followed by the 29th of October FOMC meeting. And there's a slight chance there could be a third cut before 2025 ends on the 10th of December 2025 FOMC meeting. Only I would say a slight chance. Why? Because only 57% chance. So that's almost like a coin toss. A 57% chance, a slight chance that the Fed may do a third cut to bring it down to 3.5% to 3.75%. All right. So overall, that is also by right supporting a weaker dollar, as well as the difference between the U.S. Treasury yield spread and the rest of the world sovereign bonds yield spread. The gap will be narrower, heading towards the rest of the months in this year. All right, so that's actually supporting a further US dollar weakness, all right, based from a fundamental perspective. And in today's Asia session, we start to see a bit of mixed bag in the Asia Pacific benchmark stock indices, with the underperforming one coming up from Japan, which is the Nikkei 225. So Trump himself now is very, very angered by the slow process of negotiation between US trade officials and Japanese trade officials before the 9th of July expiration date of the higher reciprocal tariffs. And because of this, Trump now trying to play hardball again, which is does previously, hoping Japan officials will actually bow down to US requests of taking in more US rice exports. So he said that Japan faces 30 to 35 tariff as Trump up deal by deadline, which is 9th of July. So by the 9th of July, if nothing is being done, Trump threatened with a 30 to 34% tariff. So that was actually much more by the reciprocal tariff of 24%, much higher. So because of this, we see a sell-off in the Nikkei 225 for the second consecutive session. So now they are actually down by negative 0.98%. And we in the 21 sector in the Japanese, we call it broad-based topics market. Let me share with you guys. So let me filter it up. Okay, so the worst hit is the technology services sector, technology services down by negative 3.4%, and the producer manufacturing, so that actually is related to international trade, is down by negative 2.1%, and also Japan electronic export, which is electronic technology, is down by negative 1.14%. That is actually causing the underperformance of the Nikkei 225 against the other Asia Pacific benchmark stock indices. So if you look at the other Asia Pacific benchmark stock indices, they seem to be much more bullish than bearish. So if you look at the Hang Seng Index, which is now up open for trading after yesterday's closure for a public holiday, the Hang Seng Index now is up by 0.61%. And the H shares, which is i.e. the China listed stocks, the China stock that are listed in the Hong Kong Exchange benchmark index, we call it the HSCI, is up by 0.64%. And closer to our home, the STI now is actually breaking fresh all-time high, which is the Straits Times Index. They are up at a fresh all-time high, also above the psychological level of 4,000, up at the moment 4,004 by a positive 0.37%, and we also the ASX 200 is also up by 0.36%. So the only outlier that is underperforming right now is the Nikkei 225, which is down by close to 1%. So later I share with you the intraday technical outlook that the Nikkei 225 right now is actually doing a corrective retracement, and this corrective retracement is to retrace that very strong burst up after last week bullish breakout from a 5 to 6 week range configuration. Later I'll touch on more about that when I cover the second segment of today's daily dose. And also back to the some economic data I want to highlight yesterday was also pertaining to inflation rate in Eurozone. So yesterday we see Eurozone releasing their aggregated preliminary flash inflation rate for the month of June. So for the headline number, inflation rate headline number, they are actually up slightly by 1 basis point to 2% from 1.9%, but within market expectation. And the core inflation rate rose to 2.3%, almost on par with the previous reading of May. So if you look at the core inflation rate, which is much more better estimation after stripping out energy and food prices, that tends to be much more volatile. It seems to us that they are now not falling that much or since May and June. All right, they're having the same level right now, and it appears that if core inflation rate continues to stabilize at the 2% level instead of falling below 2%, very high chance that the next meeting ECB will start to pause after 8 consecutive round of interest rate cuts. So that actually supports a euro dollar, which is also indirectly reinforcing our dollar weakness view from a medium term perspective. All right, so that would sum up today's daily dose of market insights on the first segment. So now let us move on to the second segment, which is the intraday technical outlook. All right, so with that, let me expand my screen over here. So let us start with the FX market. All right, over here, starting with the euro dollar. So the euro dollar yesterday managed to actually bounce very closely to our Titan short-term pivotal support level at 117.45 over here. So yesterday it inched down slightly lower to hit an intraday low of 117.61. So we're having this bullish bias view on any potential minor pullback, given the fact that the momentum and the trends, the short-term intraday bullish trend still remains intact of the euro dollar ever since that corrective decline ended on 23rd of June, where it retested the 20-day moving average and tried to trade higher in the last 1.5 weeks or so. And what we could see right now over here is that the hourly RSI continues to shape a bullish momentum condition as it's tried to actually as it has printed a higher low as we're speaking so far right now, above the 50 level mark over here. So indicating that bullish momentum condition still remains intact on the euro dollar. So given the fact that it hasn't broken above our first resistance that we highlighted yesterday, where it got tested during the 5 p.m. mark yesterday at the European session before pulling back at the start of the US session, then trading back higher again All right, so as it hasn't cleared above our first resistance at 118.10, 118.25, where we highlighted yesterday again as well, we do not want to be so aggressive to tighten the short-term pivotal support level at the first support at 117.80 right now, where we see some form of bouncing up during the Asia session as we are speaking at this 117.80 level. All right, so still remains unchanged at 117.45 short-term pivotal support level. Maintain our intraday bullish bias on the euro dollar unless during the Euro session we have a clear bullish breakout with an hourly close above 118.25, then I would tighten my short-term pivotal support to 117.80 with the next resistance level coming in at 118.70 followed by 119.10 next, which is a Fibo extension clustering zone. However, if price action did a bearish U-turn and a bearish breakdown with an hourly close below 117.45, today's intraday bullish bias will be invalidated to kickstart another round of minor corrective decline sequence to retrace it back towards the 20-day moving average, with the first support to watch at 116.95. Below it exposes 116.30 next. So i.e. still maintaining our bullish bias on the euro dollar. Next up will be the sterling dollar over here. So the sterling dollar yesterday also managed to actually did that squeeze up, almost hit our resistance level at this 138 figure level slash 138.30, the upper limit on the upside, before trading downwards at the start of the middle part at the 5 p.m. mark yesterday, before trading all the way down to hit our first support level at 136.20 before bouncing up in the later part of the US session and managed to hold above 137.20 as well as we are speaking right now during the Asia session. So no change. What we could see is that where it bounces off the pullback support level, all right, of this former bullish flag formation that did a bullish breakout on US session on Monday, tested during the European session yesterday and managed to stage that bounce over here. All right, so no change. The first support level remains at 136.20, but the pivot 137.20, pardon me, but pivotal support remains the same at 136.70 because it hasn't cleared above 138.30 yet. So still maintaining our bullish bias on the sterling dollar using 136.70 as my short-term pivotal support level. Resistance level to watch, two resistance level to watch for today: 138 figure level slash 138.30 followed by 138.70, and also if 138.70 starts to give way, but which very pretty much unlikely because given the pace of movement that we are seeing right now is rather slower. If 138.70 gives way, it may expose itself to 139.35, which is a 1.236 Fibo extension taken from the low of 23rd of June. So let me put this in writing first for you guys to see. 1.30. Give a minute. Run. Okay, you gotta wait for a couple of seconds. Yeah, good. Okay, 1.3950. All right, and also this 1.3950 also confluence graphically with this medium term ascending channel upper limit that is been in place since the low of 13th of January this year. All right, let me go back again. Okay, so if we see a sudden bearish U-turn with a bearish breakdown and an hourly close below 136.70, that would invalidate today's intraday trend bullish bias to actually see it floating downwards, kicking start a minor corrective decline to revisit the rising 20-day moving average again, confluencing with the next near-term graphical support zone at 136.30 slash 135.70. And if you do the Fibo retracement of this last impulsive up move from 23rd of June all the way to yesterday's intraday high, that also confluence between the 38% Fibo retracement and 50% Fibo retracement as well. So once you hit this level again, I'll be looking out for a bullish reversal candlestick formation to flip back to a bullish bias at the 136.30 slash 135.70, given that the medium-term uptrend still remains on the bullish side of the story for the sterling dollar. Okay, next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar pierced up as expected and almost hit our resistance level at the 66 figure level. And if we do according to some we call it momentum analysis, we start to see a bearish divergence that has starts to play out on the hourly RSI. So price actions trade higher high, almost hit the 66 figure level, which is our resistance level, before a bearish momentum reading that is where a bearish momentum reading has started to take shape in the hourly RSI. So there could be a chance that we may see a corrective decline retracement to revisit the 20-day moving average again, and also revisit this zone over here, the 65.30, 65.10 zone, which was the formerly stubborn range resistance level that has been in place since late April this year, before that bullish breakout that took shape on 26th of June. So that could be another retest back to this critical pullback support of that previous we call it a 7-week plus of sideways range configuration. And if you were to do the Fibo retracement of this last impulsive uplift move, the previous uplift move from 23rd of June all the way up to yesterday intraday session high, that constitute the 23.6% Fibo retracement and the 38.2% Fibo retracement, which also confluence with the rising 20-day moving average. So given this bearish reading that's being seen on the hourly RSI, there could be a risk of a minor corrective retracement or a minor mean reversion decline to retrace last week of bullish rally. We will flip to an intraday bearish bias for today in anticipation of this corrective pullback on the minor time scale. Bear in mind that I do not expect it to go beyond 65.10 because we have just staged a bullish breakout on the Aussie dollar, and so given the fact that we will still potentially the medium term bearish trend on the US dollar index still remains intact over here. So with that, bear in mind, because this is a very short-term intraday technical outlook, we could actually flip to a bearish bias for the anticipation of this intraday mean reversion decline scenario, using 66 figure as my short-term pivotal support level. Two support level to watch out for today: 65.30, 65.10. So if price action of the Aussie dollar float down towards this level during the European session, I would not want to be bearish anymore because the objective has been met, and instead I will look out for bullish reversal candlestick to flip back into a bullish bias stance for the Aussie dollar, given the fact that the longer time frame remains bullish on the Aussie dollar, and also the longer time frame still supports further dollar weakness. All right. However, if price action didn't float down as intended and instead starts to break out during the European session above 66 figure level, then I got to respect the price action and go back to our bullish bias for the Aussie dollar to seek out the next resistance level at 66.30, followed by 66.45, which is this graphical resistance area over here in 6th of November and 8th of November last year. Right, so that's for the Aussie dollar, watching 66 figure level as my short-term pivotal resistance. Potentially there could be a mean reversion decline towards 65.30, 65.10, which is 20-day moving average, before another bullish uplift that may occur. All right, so that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen broke down below the former ascending range support that was previously in place since the low of 22nd of April 2025. Yesterday it broke down below it and did a very steep down move. After this steep down move, there was a retracement. This is pretty much nature, and this retracement tend to pause exactly close to the breakdown level of 43.90 and 44.15, which is the upper limit of it, all right, over here. And the hourly RSI continues to be kept by a descending parallel trend line resistance, is going to shape a lower high, so indicating the lack of upside momentum. So using this zone of 143.90, 143.90 / 144.15 as my Titan short-term pivotal resistance for the dollar yen. And from a graphical perspective, since the high of 25th of June and yesterday's bearish breakdown below 43.90, it seems to be involving in a mini minor descending channel configuration where the price action just got rejected at the upper limit of this minor descending channel, or at the 10 a.m. mark Singapore time. All right, over here. So with that, still maintain our bearish bias on the dollar yen using a Titan short-term pivotal resistance zone at 143.90 / 144.15. Next support level to watch, 143 figure level, followed by 142.40, which is the minor swing low area of 3rd of June. A breakdown below 142.40 may extend it lower towards the 142 figure level, and also the lower limit of this descending channel, minor descending channel, that confluence with the minor swing low area of 23rd of April this year. All right, only a push up above 44.15 level that would invalidate today's intraday trend bullish bias to kickstart another choppy corrective rebound sequence towards the upper limit of the range, exposing the next resistance level at 144.60 followed by 145 figure slash 145.20 next. So still maintaining our intraday trend bearish bias on the dollar yen using a slightly adjusted downward tightened short-term pivotal resistance zone at 143.90, 144.15. Okay, so that sum up the intraday technical outlook on all the 4 major US dollar pair that we cover on a daily basis. Let us now focus our attention to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 representing the Hang Seng Index. Still remember that, yes, yesterday the Hong Kong 33 is closed for holiday, but we need to watch out the 20-day moving average, which is very close to our short-term pivotal support level as well that we highlighted. So since it didn't break down below the 20-day moving average and momentum has started to indeed turn positive after it managed to held above this parallel ascending trendline support, broken down below a descending trendline resistance, and continues to now print a higher low and hitting above the 50 level mark, hasn't hit the overbought level yet, so indicating that the short-term bullish momentum has now been back into the forefront in the Hong Kong 33. So no change, still watching the 23,880 short-term pivotal support level to maintain our bullish bias on the Hong Kong 33. Above 24,270 may expose the next resistance level in first step at 24,490 before 24,850, which is the medium-term swing high area of 18th of March and 19th of March this year. Only a sudden bearish U-turn with an hourly close below 23,880 that will invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence, revisiting 23,690/560. If it breaks down below 23,560, the deep minor corrective pullback may go deeper to retest 23,260, which is the minor swing low area of 23rd of June, and so confluence with the rising 50-day moving average. Right, so that's for the Hong Kong 33. Next up will be the Japan 225, representing Nikkei 225. Still recall that yesterday we flipped to an intraday bearish bias for the Nikkei 225, i.e. the Japan 225, in anticipation of this minor corrective pullback. And this minor corrective pullback hit our support level at 39,640, and also right now managed to bounce off from a ongoing minor ascending channel that I drew from the low of 23rd of July. So what I could see over here is that ever since that bullish breakout that takes shape on last Wednesday, after that sideways range configuration that was formally in place from 13th of May, it did a very sharp rally. So this short rally see only very shallow pullback. Then after this very shallow pullback, we start to see that minor corrective decline that is much more pronounced, and also being reinforced by Trump's so-called trade with Japan, right? Over here in their ongoing so-called not making any headway trade negotiation. But from a technical perspective, things are getting much more positive right now because of that. Number one, the bullish divergence that's being seen on the hourly RSI at price action trade lower low. The RSI trade a higher low over here. And what's interestingly, after that bullish divergence that's being formed, we now starts to see a bullish breakout on the hourly RSI as well, indicating that downside momentum has starts to ease off over here. All right, so and what's interesting over here from a Elliott wave perspective, yesterday move could be a corrective wave fall, and that corrective wave fall may have ended right exactly at the lower limit of this minor ascending channel, and also that corrective wave fall desired Fibo retracement level, which is the 50% Fibo retracement level. Okay, let me move it to the right so that you guys could have a better view of it. Okay, where is it? Fibo retracement. Okay, let me shift. Yeah, this is the one left. Okay, yep. So this will be the 50% Fibo retracement that has already been met. Bullish divergence. So with that, we will flip to a intraday. We will flip to a intraday bullish bias for a potential short-term recovery on the Japan 225, given this slew of positive element from a technical analysis perspective that I've highlighted to you guys a couple of seconds ago. 39,390 short-term pivotal support, flip back to a bullish bias on the Japan 225 for a minor recovery. resistance level to watch in the near term for today, given that it's only an intraday technical outlook. Okay, I'll be having this resistance here. Okay, yes, after that yesterday's deep slide during the second half of the Asia session, 40,040, followed by 40,355. All right, over here. So these are the two intraday resistance level to watch as we flip back to a bullish bias on the Japan 225 for today. However, if price action tumbled downwards towards 39,390, that would invalidate today's bullish bias to see the extension of this minor corrective decline to retest 39,145, followed by 38,850, which is the pullback of that bullish breakout of that symmetrical ascending triangle range resistance. Now turns into a key pullback support at 38,850. That also confluence with the rising 20-day moving average as well. So that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 did a nasty whipsaw around the 20-day moving average before inching back upwards during the Asia session today. And during that whipsaw, we printed lower during the 20-day moving average, but the hourly RSI starts to shape a bullish divergence as well. And upon shaping this bullish divergence, thereafter it also shaped that bullish breakout over here. Okay, it shaped that bullish breakout from this descending trend line, indicating the lack of downside momentum for it to push down lower over here. So with that, I will be using the 23,510 to 23,440 short-term pivotal support zone for today, which confluence with the 50-day moving average. So this will be my support level just in case of another whipsaw back again. So we will be flipping back to, we will be maintaining that bearish bias on the Germany 30. So two resistance level to watch out for today will be 22,890, then thereafter followed by 24,110 next on the Germany 30. Unless we see a bearish breakdown below 23,440, then this minor corrective declines sequence will deepen further on the downside, exposing the minor swing low area of 23rd of June to 23rd of June, this to 24th of June, acting as a next near-term support level at 23,150, pardon me. All right, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 yesterday was a top performer, managed to skew upwards over here as expected. So what we could see over here right now, the hourly RSI now is at the overbought level. All right, hit the overbought level. No bearish divergence that's being seen so far, right? Because price action seek out a higher high on the RSI over here, and is now trying to actually work out from the overbought area by dipping below it, all right, over here. So there could be a minor pullback over here. So this minor pullback could take it down to the first support level to watch, which is at 44,180, which is close to the lower limit of this rather steep minor ascending channel drawn from the low of 24th of June this year. So I'll be using a slightly lower level, which is yesterday's not say yesterday, so this was Monday's swing low area where price action almost tested it at the start of the US session yesterday before shaping that short rally. So that is 43,965. So 43,965 slightly adjusted upward pivotal support level for the US Wall Street 30. Maintain our intraday bullish bias. Next resistance level to watch 44,750/820. Then thereafter followed by 45,100, which was the fresh all-time high that's being current all-time high that's been seen late last year, and also confluence with the upper limit of this bullish ascending channel, and also a bunch of Fibo extension cluster level as well. However, if price action starts to break down below 43,965, then this bullish impulsive up move will be invalidated to kickstart a minor corrective decline sequence, exposing 43,550. In first step, below it may seek out 43,290/43,160, which is the pullback support of that former ascending wedge resistance, now turns into a pullback support level. So that's just the US Wall Street 30. Next up will be the SPX 500. So the SPX 500 continues to be held at our Titan short-term pivotal support at 6,165 before bouncing up higher during the later part of the US session and traded sideways. So no change, still using 6,175. Hourly RSI continues to trace out a higher low over here, right above the 50 level mark as well. So that indicate no clear sign of a bearish momentum. So still maintain our bullish bias on the SPX 500 using 6,175 short-term pivotal support level. Two resistance level to watch out for today: 6,250 followed by 6,290, which is the 3.618 Fibo extension taken from the low of 19th of June. However, if price action starts to break down below 6,175, then the impulsive upmove sequence will be invalidated to kickstart a minor corrective decline sequence, exposing the next two support level to watch on the downside: 6,136 followed by 6,110 next, which is a 38.2% Fibo extension taken from the start of the wave tree, the minor impulsive wave tree. All right, so that's close to the 38.382 Fibo retracement. All right, so let me shift it back to the right. Oops, I am right, left. Oops. Okay, sorry about that. So this is the Fibo retracement. All right, over here. So this is a 38.2% Fibo retracement. All right, so this one, let me. Okay, so now next up will be the Nasdaq 100. So the Nasdaq 100 yesterday pierced down below our short-term pivotal support, a very tight one at 22,560, this level here, but managed to survive right exactly at the dotted gray line here. So what this dotted gray line is actually the pullback support of that former ascending wedge range resistance level. Right, so with that, we will still have a bullish bias on the Nasdaq 100 level. Why? Because of the hourly RSI is now turning positive by printing out a higher low after bouncing off from the parallel ascending trend line, after bouncing up from the oversold region over here. So with that, we will use 23,360 as my short-term pivotal support level on the Nasdaq 100, still maintain our intraday trend bullish bias for it to seek out a recovery for today. First resistance level to watch will be the minor swing high that got rejected on the start of this week at this on Tuesday, got rejected on Tuesday at 22,710, which is also the 2.618 Fibo extension. Above 22,710 exposes 22,855 next. However, if price action did a bearish U-turn and have an hourly close below 22,360 pivotal support level, then that will invalidate today's intraday bullish recovery scenario to seek out a extension of this minor corrective decline sequence, exposing 22,235, then thereafter followed by 22,065, which also correspond very closely to the rising 20-day moving average. All right, so that sum up all the intraday technical outlook on our major stock indices that we cover on a daily basis. Let us now move on to the commodities segment, starting with Gold XAU/USD. So Gold XAU/USD did a pullback as we are speaking right now, but where this pullback ends, this pullback ends right exactly at the former descending channel, now turns into a pullback support level. All right, slightly above the 50-day moving average at the 33.18, and also the hourly RSI managed to bounce up after a pullback towards the 50 level mark over here, indicating there is still some form of bullish momentum on the Gold XAU/USD. So with that, we will have a slightly higher short-term pivotal support level for today, 33.18 as my short-term pivotal support. Still maintain our intraday trend bullish bias recovery scenario. First resistance zone to watch will be 33.46/33.60, slightly adjusted upwards yesterday. So above 33.60, we will potentially see a further potential recovery to seek out the next intermediate resistance at 34 figure level, right, which is 3,400. Only a bearish breakdown below 33.18 will negate today's intraday bullish bias to see a minor corrective decline to revisit 32.93. Below 32.93 may potentially invalidate the so-called recovery scenario and seek out a deeper corrective scenario sequence. In first step, exposing 32.50, which is the minor swing low of this Monday. Below 32.50, seek out 32.05 next, which is the minor swing low of 19th of May and 20th of May. So i.e. still maintain our bullish bias recovery scenario for Gold XAU/USD, holding above a tightened short-term pivotal support for today at 33.18. All right, so next up will be the West Texas oil. So very quickly, the West Texas oil continues to trade in a sideways motion since the low of last Wednesday, but can't break above our short-term pivotal resistance level at 67.67. So we still use 67.67 as my short-term pivotal resistance level, still maintain our bearish bias within this sideways range configuration. Next support level to watch will be 64.05. Unless it is able to break down below 64.05, which is also the 50-day moving average, then that weakness could deepen further on West Texas oil to expose 62.50 followed by 60.30 next over here. All right, so next, still maintaining our intraday trend, but still maintaining our bearish bias on the West Texas oil within this sideways range configuration. However, if price action starts to pierce up above 67, then potentially we may see a recovery in first step towards the next resistance level at 65.15, 70.60 pretty much crucial, which is also the 20-day moving average and also the former major descending resistance from 8th of September 2023 high, where it reintegrate back below it. Only a breakout above 70.60 may see a much more pronounced recovery towards 73.60. All right, so that sum up the intraday technical outlook on all the major cross asset classes. So before we go, let's take a quick look at the economic calendar for today. What are the key data to look out for? So today will be Wednesday. So Wednesday, during the start of the European session, will be a rather quiet one. So we have one ECB official speaking at 4 p.m. Singapore time, ECB Gondos, followed by 4:25 p.m. ECB so like at 5 p.m. ECB Sapolin. So this is very likely due to the speeches that's being made in this last day of the ECB Global Central Bank Forum. All right, then as we head into the US session, we have a pre-look of this Thursday non-farm payroll data. Why Thursday? Because Friday is is an independent day for US, so the non-farm payroll data has been shifted one day earlier on Thursday. So we have this 8:15 p.m. ADP employment change. So this is like a private sector compile labor market data for US. So this will be out at 8:15 p.m. Singapore time. And at 10:15 p.m., we have ECB President Lagarde speaking again, so I don't think she will change much of a tonality. So 10:30 p.m., we have the weekly EIA crude oil stockpile change, so that could actually seek out some kind of short-term movement on West Texas oil, 10:30 p.m. Singapore time. Then thereafter will be a rather quiet US session. All right, it will be a rather quiet US session. All right, so with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you a great day ahead and we shall speak again tomorrow. Thank you.